Good morning, team. It's 2:16. This is going to be one of two videos. We have 60 tickers to cover, and I always start with a little recap about the market. Today is Monday. The markets in the US are closed, but as you can see, my screen is ticking, so the markets everywhere else is open, and we are looking at the futures. So I will use that picture and talk about it. So you see a yellow line followed by a pink line that goes down. I drew these by hand in the live room at some point last week because we had bounced off of the red circle into the top end. And I said, there's a rule that says buy the third touch on the way down. I said, I haven't heard of one that says sell the third touch on the top, but it did work. And they gave us more than 3/4 of the downside scenario. So from here on out, having nothing else changed, here's the statement. I'll have more on this tonight or tomorrow morning. The statement is, if we can rally 3%, it's actually 2.8% on this chart, we clear everything, and then we can rally another 280 points to 300 points. So basically, the SPY would be in the 710s, and the SPX would be in the 7180-ish, rough math there, if we can rally 3%. Before we drop 1.5%. If we drop 1.5%, we would lose the support we bounced off of recently, and that might carry forward more downside. Not a disaster, it's just a setback. So the consolidation zone is continued to extend. The bulls just refuse to take the carrot. It's right there. And they have refused since October. They've tried, they've had good pushes, they have all the tailwinds, but they, for some reason, are not doing it. We keep tag teaming. So rotation concepts, you're going to hear all about it this week from experts out there, and you'll probably hear a little bit from me. Small caps versus tech. I think the biggest thing is NVIDIA in about 14 days or so. That one, the reaction to NVIDIA, could make or break this market. Without further ado, let's start with the first sticker you guys asked for. They are in alphabetical order, and this one is nice and neat. I don't have to say anything. Just look at it and read the lines. This company, Amazon. Amazon has fallen into a pretty good support zone. You can trade it. I've sent some trade ideas on it. You can even buy some calls on it. You just have to know what timing you're dealing with. So support, you could expect them to try to hold, and if they hold, they have to bounce. I drew the red lines. Those are areas of difficulties on the way up. So my least favorite way to go long on Amazon is to actually buy calls. But it does work. It does pay quick as long as you have tight stops. You see the word tight stops. So credit put spread goes long without needing a bounce. It just brings your income limited. And if you add a debit call spread, you can use that credit to buy something to the upside for a couple of months to have the opportunity to double that amount. So the combination of a credit put spread, debit call spread would be my favorite way of going long a stock, not knowing if this is a floor or not. If I'm buying stocks for the long term, I wouldn't add if I'm already long, but if I wanted to get involved with Amazon, I'll sprinkle a little bit of dust. The earnings report was fantastic, and I think people got spooked by the amount of money they plan on spending this year. Applied Digital, this one just reported, I believe. It did what it did. So now the stock is like the market, stuck between hard sellers that are pretty close and hard buyers that are a little bit further down. So this favors the bullish scenario short term, okay, because the sellers are further down. Areas of support, I would think you would find buyers step up to the plate just under 30. And we should have also some sellers at the two blue lines that you see on my screen. So as you approach 37 and 40, 41. So if I zoom back out to see the big picture, clearly this is not an obvious entry point because it's way up there and it was recently way down here. Even though it cut through resistance lines before, it has done that 3 times. Here's one that failed, here's one that failed, and here's another one that failed. Maybe this one sticks. So trend, yes. Be long, yes. If I'm long, I don't add. If I want to get long, I don't go all in. I leave room to add later. Next stock is, I don't know this one, ARBE. ARB Robotics. I do like robotics. Why is this one going south? There's no income. That's why. So the stock price is completely extrinsic. The value in the stock is based on your opinion in it, nothing tangible. So the chart, not really a good gauge. It's at a low, but it can get lower and it can go to zero. You need to do your homework on the company. So don't spend a lot of time on the chart. Not a good gauge. Next, we have ARM. So this company is an outstanding, I don't know why I put that there, margin. The gross margin is phenomenal, but they need to work on their operational margins. And it fell into a support zone, and we went long through selling a put or selling a put spread. I said this is a stock I would sell a put to own shares. I doubt it's not going to be relevant in the near future, so it's a buy to dip moment for this guy at any point in time. Now, my only concern was when I sent out a buy to dip method is the fact that it's doing this negative thing when the market cannot stop rallying. So I find a disconnect. Why is Coca-Cola, I keep going back to Coke, breaking through records and this one, ARM, struggling? All right. Having said that, the easy bounce, oh, that's why I put that. I said not an obvious point of entry because the easy bounce happened and now is going into that blue line, which is around 132-ish, give or take $2 or $3. And if you look left, that has been right there, a point of contention, right? It was floor, and then they fell through it, and this is their effort to regain it. They can. And then they have to deal with all kinds of resistance levels on top. So I can tell you 132 plus or minus is a problem. 142 is a much bigger problem. 145 specifically, and this whole box. And then repeat that at 161. So have some upside realistic expectations from it in the short term. If I bought it for a trade and I'm making money for a trade, not wanting to hold it, I would be out here because I look left and that's not going to be easy. So I got the biggest bang for the buck quickly. Can I still sell puts and put spreads? Maybe. And can I buy shares? Of course, always. But if not, all in. Like I want us to be able to add lower because the market could be toppy. We'll see. Asana is the next ticker. Boy, that used to be pretty popular. It must be a software as a service. Developing work management platform to help organization. That sounds like SAS to me. Software as a service, like anything like CRM, they provide workflows or whatever for companies or people, have been rejected. People hate them right now. That's the fad. So true or wrong, it doesn't matter. That's what the sheep are doing. So you have to be careful. This is Asana. That's an all-time low. So you have to ask yourself, markets are at all-time highs. Asana is at all-time lows. It doesn't matter what you think. The market hates it. So how do you handle this? You do your homework and you establish how strong is your thesis. Let's say I bought shares and I'm stuck. I don't add here if I bought them at 10. Because if it rebounds and I was right, then I didn't need to add. But if it falls lower, I need to add lower. So I would leave room. If I ever wanted to own these shares, and I know like I'm convinced that it's going to do well in the future, I would convincingly sell puts to own shares. Now I have sold puts at $6 and they've gone to zero before. The bank is FRC actually. So stocks do go to zero, and be careful. And cheap doesn't mean it doesn't get cheaper. Do your homework and then decide. In fact, I'm going to add this one to my list of stocks. Actually, not here. I'm going to add this one to a list that I keep tabs on to see if there's any chance of selling puts for somebody that wants to replace stock. So how do I deal with stock that is buried? I revisit why I got into the stock before I decide anything. If I honestly don't have a reason, then this stock beat me. I either sit on it for a hope of return, maybe buy some puts to protect myself, sell some cover calls if there's any premium there. If you need help, pop into the live room. We talk this stuff all day, every day. And why can't I add it from here anymore? Add Asana. Hey, there we go. AVGO, outstanding company, fell on some hard times this week, but that one is very volatile. And I am convinced that I would never want to trade it because the market maker that controls it is very crafty and they hate retail traders. So be careful trading that stock. If you're investing in AVGO, it's an outstanding company. Look at the P&L. I would own that stock with confidence. So it comes down to what level you want to enter the stock at. So if you don't know, you just nibble on shares. This way you eliminate the time element. Credit put spreads are always good for me. Debit call spreads are always good. Both combined are really good. Hopefully on a downturn, like down here, not up here. Right now, it is stuck above some pretty solid support into 317, 318. Better at 308, 39, 310. And it should be bulletproof into 295. If we lose 295, I think we're going to have an issue. So I'm going to move these to the numbers I just mentioned or close to them. So those two solid. So basically anything below 315 should be solid support until you lose 295, 292. And then you have to ask yourself, like, if you get into this blue box, you're like, what the heck is going on here? That's the concern. Meanwhile, there is some resistance, but it's not insurmountable. If you can clear 352, 353, I think you can clear all of these. That means the sellers are done. The 1010, October 10th wow moment, look at where it's at. It's at the bottom of that range. And this is a target that we've thought they would do before, and it took its time. We do have a descending channel, though. Lower lows and lower highs. So the sellers are in charge. They are selling rallies. If you look left, there's no denying. Rally sold, lower low, rally sold, lower low, rally. This one is making a little bit more progress, but you can see how I said if they can take out this one. So this whole zone is, difficult. So credit put spread, I'm very confident. Buying calls, Boeing, I would not touch it up here. I think it's overextended. I think people misread or misjudged the headlines that it had. It had great headlines of getting contracts here and contracts there. Sales is not the problem for Boeing. They have a pipeline that goes out to years. And celebrating a pipeline to years is not stacking on the sales, the stock price, because it can only deliver X number of planes. And it can't recognize the sale, the order, until it delivers the plane. So they can take orders for 10 years. If they cannot deliver but 50 planes a year or whatever the number they deliver, then the sales are forecasted are the sales that are going to come in. All these extra headlines are not extra sales. So it's extra pipeline, extra years of sales, but not extra sales per share. Anyway, good stock. I wouldn't get started here on Boeing, and I would assume it can. Let's put it this way. I think it's easier for it to get to 220 than it is to get to 280 or 270 or 268. How about this? I think it's easier for it to get to 220, which is a lower low than February of this year, than it is to break December 17th or whenever that is. When is that? Oh, January's highs. Oh, okay. So it's not easy to break out of this. What is this one? Was January 30th. Okay, so that trade worked out by the chinny chin chins. And so if I were to reuse this box and I do this, I would say this is the battle. The February. And I bet it's easier to go at the lows or below the battle than it is to break out. Okay, there we go. That's what I say about this guy. So gauge your entries short term based on that comment. It's not an obvious point of entry. It had an amazing trend and it looks like it's topping out. It looks like it. How do I know? I know by the next step. Which big line is it going to take out? This one? That's pretty big. Or that one? That's even bigger. So that's what I'm seeing. We'll see. Beto. You have questions in here? Good morning. Good morning. I'm amazed that we have 45 people in here today on a market off day. Thank you for being here. So Bito, that's not Bitcoin, folks. It tries to track Bitcoin, but I've expressed my concern of people trading it like Bitcoin. It is not Bitcoin. Zoom out, you will see that it's drastically different than the path of Bitcoin. So I wouldn't mind owning this stock because when it pays dividend, it doesn't always. It pays a penny when they can't pay, and then it pays $1 or $1.20 when they can, and it's only a $10 stock. So it's a crazy stock to own, but I wouldn't mind risking some money. In the past couple of weeks, I've used it in the live room to teach people how to sell puts to own shares. I said, if you don't mind risking $1,000, you want to sell a naked put on this one to get assigned. And then your break-even point is 10 and a quarter. So if somebody woke up on Monday, assigned those shares because that bet expired, then they are down $75, literally, maybe $70. That's it, total. So now they've gone through the process of selling a put, getting assigned, and not being scared. So if I did that, I'm assuming that's what you're asking for the ticker today, then I own 100 shares on Monday morning, and I can sell a covered call. So I can sell a $10.50 call or a $10 call. $10 call might work. I don't know the specifics. We need the data once we open. Come into the live room. I'll walk you through it. But the concept is if I can sell a call for a quarter and 1 week passes and that call dies in my favor, so nothing happens, I keep my shares. Now I've cut my loss by $25 out of $70. So that's 1/3 of my problem gone. I do it another week, another 1/3. I do it another week, another 1/3. Let's say the stock soars, I get out with no loss. And after that, if they pay a dividend any months, let's say $50, now I'm even. Another 50, now I'm making money until the end of time or until it goes to zero if it does. So some people chose to roll it so they don't get assigned. Also fine. Now they're committed to, they collected more credit because they moved it up to 11, which is fine. It's the same math, roughly. Okay, the next ticker is Bitcoin, related, but Bitcoin, folks, is BTC USD, not BTC for next time when you submit a ticker. I have been on point with Bitcoin, telling you zoom out and stop listening to the news. Nobody knows what they're talking about. Okay, and here's how I dealt with Bitcoin, and I've been very, very successful for the group in Bitcoin. When it was above 100 and dipping below 100 and people freaking out, oh my God, it's not 115 now, it's 98, can you believe it? And I said, here's the math on Bitcoin. It's one zone after another. Okay, the thing moves thousands in minutes. So it's a zone. Think about it. Here's what I said months and months and months ago. It's battling for 98. Plus or minus a few thousand. If it loses that, it battles for 88. These are not numbers I picked out of the sky. These are numbers based on the charts. 88 plus or minus 1,000. If it loses that, it goes to the low 70s plus or minus 1,000. If it loses that, it goes to the low 60s plus or minus 1,000. And that's where we are. It's trying to hold the low 60s, but not yet able to go above the low 70s, the step they just lost before. They've been as low as 60. So if they're triggering 60 again, they'll be in the 55 to 52 area. Repeat the process down there. If they can't hold it, then it's 38. So these are realistic numbers. I'm not forecasting 38, but I'm telling you, if you don't think it can go to 38, I don't think you know Bitcoin as well as you do. So how do I trade this? So Bitcoin is better at gold than being gold. What do I mean? If you know that for ages, people trade gold by buying a little bit at a time, that's how I would treat Bitcoin. Just say, okay, I'm going to buy $100 a month. And sometimes you get it at 100,000, sometimes you get it at 5,000. It doesn't matter. And then you buy $100 a month. And then when it crashes, you allocate more. Like I'm waiting for the next crash if it comes when it comes. I'm going to reload like I loaded the first time. So we caught the very bottom last time and the time before it, and we'll catch the next one too. So a little bit at a time. Starting point here, it's not crazy bad, but it's not awesome. So it may be 180 but don't listen to these fools on TV. You saw how much of a fool this guy was, right? He says by December it's going to be 200,000, and then by December it didn't come. I need until February. It'll be 185,000. Okay, how many shoes can you fit in your mouth, sir? So forget about these fools. They don't know what they're talking about. Coupang. Man, Nick, you're aggressive this morning. Hell yeah. Coupang, CPNG. I don't trade this stock because it does things like this. It's on a tear one day and it's on a ride to hell the next. Where is the conviction? The P&L is solid. So the investors, when investors in a solid P&L do this kind of stuff, I don't want to trade with these investors. This way, yeah, this way, you know what? That reminds me, I need to buy some. This way it is, look at this. Oh my goodness. So that proves my point even more. So you can, I don't care how much I love the stock. The people that traded alongside with me don't know what they're doing. They either love it or hate it. I'm not on board. You can do all the homework you want. The company can do all of this, and then the stock does this. No thanks. So having said that, this is a baseline from years ago. 2 years ago, to be exact. February, that's the rise. So between here and 16, 15, it should be bulletproof. I don't know what they do. It must be software as a service. Retail, restaurant, delivery, video streaming. Provision of retail, restaurant, delivery, video streaming, and fintech? What? Pick a business, man. Okay, so this is like that other company. I forgot its name. Okay, so what's not to like? I'm going to add it to my to-do list and do a deep dive and say, why? Somebody please out there, set me straight. Why is this not on everybody's radar? It has a good P&L, even quarter to quarter, and it's in multiple businesses, and the stock is going straight to hell. Huh. What is going on here? Okay, I'm intrigued. It's not a bad starting point if you know what you're doing. Shares, great. If you buy more than 100, sell covered calls. You can sell one call per 100 shares you own. Don't load up. Selling puts, if there's premium, yes, as long as there's no, earnings in 10 days. Okay, so that makes it a lottery ticket. It doesn't sound too expensive if you buy a few shares, you know. All right, CRM, software as a service. So you can say, this is why it's falling, this is why it's falling. If I didn't draw this in blue, then I'd say, okay, this is why it's falling. Look at the blue drawing. This drawing was there before the drop. I said it fell from point A to point B, consolidated. If it loses the consolidation, that's point C. It doesn't seem likely, but guess what? It's happening. So this is definitely not an exit spot. CRM is not going anywhere soon, I don't think. The service is still awesome. And I would imagine if I owned a company, a CRM that makes the few people I keep even more important. If I wanted to cut costs, I would fire people. That sounds harsh, but that's the most expensive thing on any company P&L is people. They wouldn't cut services that don't cost anything per seat, $40 a month, whatever it costs per seat. Anyway, I would think that CRM is definitely a starting position, not an exit point. I may have already, and I know I've suggested a credit put spread. Let me see. If I can, instead of battling the credit put spread, I would take shares and then see if I can make the math work out. If you need help with that, when I sell a credit put spread, I sold something that's losing me money. I bought something that's making me money. If I have enough money in my account that doesn't cripple my account, I may consider saying, you know what? Give me the shares at the price and let me make my break-even point much lower because you own something that's making you a lot of money. So that lowers the entry price of the shares once you get assigned. So there might be some tricks to do there. Rolling down and out would work, and then you get bailed out in about 9 days, hopefully, when the company reports earnings and doesn't say anything bad about the expectations of futures. If they address the issue of, this is a good long shot. Like if I wanted to gamble on earnings, I would take a bullish bet and just see what happens. A debit call spread costs you all about $200 and you can make $300. That's it. A credit put spread may bring you $100 and could cost you $400 if it falls through on earnings. Combination of both may be a little bit more risk, but also minimal risk to be in the stock. A debit call diagonal will probably be the best at the earnings week. So come to me the day it reports earnings or just before, and I will come up with something. I would bet long just because. CoreWeave. Okay, so AI this, AI that. We called it a circle, you know what. So this company is software as a service. Why is it not one of the ones falling? But it's anointed because it's partially owned by NVIDIA. So people associate it with NVIDIA. And the way I understand the business here, they outsource AI. If you have a company, you don't want to build an AI infrastructure, this is your plugin. Think about tech in the past. If you don't have a tech team and you don't want to spend on a tech team, you outsource companies that did tech for you. This is about the same thing. So we don't know where it's going to end up in the future. AI is the hot buzz right now, but the king of AI can't get any traction. So everybody else in AI can't get any traction either, NVIDIA in this one. And good solid support below and below the below. I can't tell you it can't go to 48, but it's not, it would be a good deal down there if this is a good deal and the trend continues. So let's assume support holds up in the next 10 days through earnings and they take out 115. They can give you a burst to 150. Exit if you're long, if you took it as a trade. That's my advice for traders. If you invested in it and you're stuck in it, the plus or minus money, I wouldn't get out before the earnings. You could protect yourself through the earnings by selling covered calls and smart covered calls that don't cause a loss, and buying some puts or put spreads to protect you through the earnings in case it says, oh my gosh, my business is going to be down for 50% and the stock gets dropped 30%, just in case. There are tricks you can do. Pop into the live room. This here is an okay starting point. I would sell puts to own shares. I would sell a put spread probably to start because there is earnings, and debit call spreads. This way I'm long if I want to. If not, I've risked only a few $100. Cisco. I called it. I freaking called it. I just didn't have time to short it. So I believe this was a spend issue, right? Oh, no, I get it. I remember. So my beef with other companies of the same business reporting, record sales because they jacked up prices on people. This is proof that I was right with my comments to be skeptical about that other company that starts with the letter M. I don't want to say it to trip up my video watching AI. So the fact that other companies can jack up prices of memory says that the memory market is constrained. And this is what this guy said. They said, oops, we have a problem. And you see what happened to the stock. It's one thing to fall, and it's another thing to fall through solid consolidated months of support like it wasn't even there. Like, what the fudge was that? All the way down to 73. Clearly, they overshot. Look at the business. Nothing negative that they said is visible in the P&L, but this is how Wall Street acts. When they say AI is great, they price in everything AI to the upside. Whoop. And then they say AI is not perfect, and they price in the worst case scenario immediately. Whoop. Dummies. But that's what we have to deal with. Meanwhile, the dummies created a problem. If they go to 72, I think they can go to 65. That's the reality. There's a lot of support at 70, give or take a few bucks. But the drop is so ferocious that it might overshoot a little bit. Now it's a much better deal than before. Up here it was grossly overpriced. Down here it's solid. And then you have to layer on top of it whatever risk may or may not come from the market. If the market is fine, this has a chance to stabilize and we wouldn't even talk 71 or 72. But if I wanted to sell puts, this one is a good candidate. It's a beast. It survived the dot-com bubble, the financial crisis. So look at this P&L. It's a beast. Now it's attractive. In fact, last week, I'm surprised that not many of you came to me. Did I send out a trade on Cisco? Maybe I did. If I didn't, shame on me. I should have. CVS. I don't touch this stuff. I don't. Look, P&L, nice, no profits, but look at it. It's like they discover gunpowder every couple of months. Headline City. Let's say you're in it. Let's see if we can give you some. All right, so it's a no-touch zone for me. This is a daily chart, nothing fancy. A great trend from the dip in last year's. No, wait. Yeah, last year's beginning. Wow. And now you're stalled. If I look left, there's no way this stock needs to be over 88. There shouldn't be. If it is, then it'll be a sell. There's no improvements here unless they have talking points that I don't know about. This as good as it gets for now. You might be able to get to 88 maybe, but it's a trade, not an investment for me. As far as an investment, next time it drops below 68, it becomes much more attractive. So tradable, yes. Here, I would be inclined to sell a call or a call spread, but I wouldn't touch this. The industry I don't like, but it's definitely not an obvious entry long. Dell. 10 days before earnings, this guy moves on earnings. You can see they loved it and hated it, and now they're in the middle. So it's in the middle of a consolidation zone, right? So I can tell you if they lose 110, something's going to happen. Let's zoom out to see what. Wow. Okay. P&L relatively stable year after year. And look at this. That's why I don't trade this stock. They use words to maneuver the stock price, including the owner or the founder. Look at this. And they're right in the middle of that giant range. So what are you going to do with this? It's a total gamble. I think it's totally easy to get to 95. And it's totally easy to get to 144. And it's not easy at all to beat those two numbers either way. So if you can stomach 95 to 144 whipsaw, go for it. Me, not for me. I don't have an edge. If you force my hand, I would tell you, all right, let's sell an iron condor outside this yellow box. That's what I would do. The Dow. Okay, I don't know what to tell you. It's at all-time highs. What are you asking from me? I can tell you what I don't like about this. This trend is fake. I shouldn't say that. This trend is heavily affected by a handful of stocks. So the Dow is a price-weighted average, and in it, there's a stock that's $1,000 now, Goldman Sachs. So as well as the financials are doing, you have to pay attention to what happens to Goldman Sachs because it will make or break the Dow on any given day. And then it has other stocks that are also high dollar. The bigger the dollar amount, the more important. So if a stock is $1,000 and another stock is $200, that means that one stock, regardless of how smaller the company is than the $200 stock, means 5 times more. Like the smaller company, smaller company price, biggest company on the planet will matter. Like if it was up 5% and the bank is up down 1%, they offset each other. Yeah. Anyway. I don't know what you're asking for. Not an obvious entry point. Great trend. Tradable to the upside on dips into the moving average. But if we break trend, this might come down. Now, I think the driver of late are the industrials. So you would include Boeing, maybe Home Depot to a certain extent, and CAT. CAT is a huge stock in there as well. So the industrials are a big impact here. And Lockheed Martin and things like this. So you want to pay attention to the strength of the industrials. And what if the bid in the industrials slows down and they don't roll into banks? Then you have 2 major leaders off. Right now, they're tag teaming leadership inside the Dow. If I were to short an index, let me rephrase it. If somebody told me the market is going to correct in the next 6 months, this one has a lot more to fall because this one is still at all-time high levels. Like, look at it. This was an all-time high level, whereas the S&P didn't do that. DraftKings, Bible dip. I think I sent it out. Not the kind of stock I would trade for myself, but it's definitely a buyable dip. Read the prospectus. Read what they said. I have it here. Let's see here. Sales growth, 43%. 43. They grew sales 40% or more. Okay, then. It turned profitable on earnings, like in net. No dividend, no buyback. CEO talking point, a company's first annual profit. Guided 20 revenues, beat estimates. The earnings per share. So, what the Wall Street? This company beats sales 40%. 40 freaking percent. Beats profitability, turns profitable for the first time, and beats the estimates and raises, and the stock falls apart 13-14% into a baseline. This is an entry zone, not a panic exit. What the? If you ever doubted the fact that Wall Street doesn't know what it's doing, that if you listen to the experts out there, you would do everything wrong, look at this behavior. What? Okay, I love that Wall Street is so stupid. It just makes our job so much easier. Yeah, this is definitely a nibble, not an exit, but a drop of 13% may carry lower. So unfortunately, the rally was too quick here in 2023. So this might be, and it's old, so it might be frothy area. So I bet you we can sell some puts in it. I don't know why we didn't. Maybe we looked and there was no premium. I think that's what happened. We looked and there was no premium. We will look again. EEM. So this is emerging markets. I would short that outright. Emerging markets. So this is kind of like a China stock type of a deal. And there are other tickers like that. Pretty high. What you want to do is you want to find out what's in the fund. Let's find out. I haven't looked at it in a while. Okay, now I know. I don't even need to look. Taiwan Semi is the top stock in there. So if you look up semis, this is what it is. I wouldn't short it. If you're short the market or the QQQ or shorting XLK or SMH, you're probably shorting this one too. We've made money with EEM before. I'm not going to trade it. This is not an obvious point of entry. You want to go long on dips into the moving average if you believe in the Taiwan Semi rally, because this one is going to follow it. Good baseline, anything below 56 into 53, that should be solid support. So if they drop into the trend line, that's your solid entry for a trade. From an investment perspective, maybe you want to wait out to see what happens with NVIDIA's earnings. FedEx, I'm short, and I would add to my short if it continues higher. You cannot convince me that this P&L deserves this kind of stock price that's way better than NVIDIA. Is this an all-time high in FedEx? It is. This is ridiculous. I don't care what the reason it's rallying for. This is going to happen again. That's my take. This is going to happen again. This is going to happen again. So this time it's different. Let's take a ghost. I'll go from here to here. I'm short and I'm losing, and I will add to my short if I have to. I'm short via sold call spread that I shared with you and a debit put spread. I will roll my credit call spread or sending out to be a sold call naked if I have that kind of account. If not, I will just buy myself more time on the credit call spread. It wouldn't cost me anything if I do it early enough. I do have time on the clock. I know that. And the debit put spread can come back to life untouched. But if I'm worried about it, I would change the debit put spread for it to survive so it doesn't die. This is ridiculous. I'm using logic and facts. The facts have not changed. The P&L still sucks. And actually, let's find out if it does. Yeah, there's no, like gross margin is down to here. So there's no margin. That's the sliver they can make money with. International and United States, mostly it's Federal Express, and they have some other stuff here. And they have debt up the wazoo. Let's go to the statements and look at debt first. The cash from operations is fantastic. It generates a lot of positive cash. So it's not burning cash, so to speak. Balance sheet. Net debt, not good. Growth, non-existent. Look at this. Sometimes it's there, sometimes it's not. So not like last 3 months, last 3 years, flat. Let's go quarterly. Maybe it's there, maybe it's not. You see? So what are they chasing? Just the cash flow story? Is that what they're chasing? Statistically, is it expensive? 20 PE. Hell yeah. That's the highest number on the screen. Almost one-time sales. Not that that's a good metric for it, but that's more than any time before. Let's go on an annual basis. PE. And yep, highest number. Nope, we had a higher number in 2015 and 2014. Oh, we have had higher PEs, but not since 2020. Anyway, not cheap. Charts extended. It's not a long. I am short. I'm not backing down. Figma. Software as a service, unfortunately. And then what the hell is that thing? 1.2 billion loss. The day write off something and earnings in 2 days. So drum roll. If you own the stock, this is the biggest drum roll. On paper, if you take this out, this thing is skewing the look. I don't know what that is. You need to go find that out. You need to find out what that news is and know if you need to buy puts for the earnings or not. Yeah, all they want to tell us is about how the CTO sold 200,000 in shares. We need to know what this $1.2 billion write-off is. So find that out. The chart is not going to help you here. You need to do homework on the company viability and what the hell that was, and maybe protect yourself over the earnings. GDX, I am short outright and losing money, but if it comes down to where I think it belongs, I will make money. As of now, I'm red still. So GDX are miners, gold miners. They're not gold, but they do follow the price of gold, which I think has topped, at least for now. So it might get to 108 again, but I think it'll also bring it back down. This might come back down to better footing, which is below 94. And if I'm right, this might even go to lose 85 and maybe even 80, but that might take a year or so. What I'm looking for is a break in trend. If you're looking at my screen, you have a trend going, and I want to see if this is a topping formation, because if it is, then the other trend that may surface after a consolidation would be something like this. If it is, you heard that if part. So I'm looking to see if I can get the yellow path. So now the battle is it's consolidating at the breakout, which was around 90, 92. So they did poke through it a couple times. If they poke through it a third time, it's a done deal. This thing is going to trend lower, and then 70 is not crazy, but it might take months and months. So I'm short stock outright, traditional. I wouldn't buy puts for it. I think they can chew you up, but I would sell a call instead of shorting the stock, and I would do it out to the end of the year. Gold. I love gold. GLD is the ticker. And same comments. Gold's an asset that should appreciate over time. And as Michael Saylor answers about Bitcoin, I'll tell you here. Well, what's the maximum it can go to? Well, if it's not going to zero, it's going to 1 million eventually, right? Because money gets cheaper and cheaper because the government keeps devaluating the dollar. And so above 470, you might get 480 and then hit another wall, 482. I would short it again up there. I'm not short gold. I'm short silver still, and very, 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 very profitable. So if we lose for whatever reason 447, we're probably going to get to 430 and retest for 435, 430. And we don't want to talk about the next level down, but if we lose 420, we'll talk about it when it happens. I think that it is easier, this is a subjective statement, it is easier to lose this support than it is to take out this. Up here, you had people lining up around buildings to buy gold everywhere on the planet. I don't think they will line up around buildings to buy gold if it loses this level. That's the easiest way I can tell you how the downside of losing this bubble will be pretty violent. It's not like it hasn't happened before. All right, Alphabet. At one point, it was unbeatable, and now it can't find footing. What's up with that? This is the winner of AI, in my opinion. In the end, it might take years for us to figure it out. Awesome performance, buy the dip mode. Unfortunately, I can't pound the table on it other than just selling credit put spread into support and hoping the time expires before they hit you. Why? Because the rally was insane. This is not the type of stock that does this. Okay, this is a boring company when it comes to tech. It's not, look at it, look left. You don't see this kind of move. It's parabolic. So parabolic moves, unfortunately, have the potential of bringing in pain, as some guy on TV says. I'm going to show you something here. Let me tell you something. Okay, look at my screen. Let's say they lose that yellow line. Focus through everything else. Okay, look. This, you see what I'm drawing? I'm drawing what if the bounce comes and the bounce doesn't go above 330? Okay. If the bounce doesn't make a new high and they come back down and they lose the yellow line I just drew, they will end up in 270 and that will be just normal. That's what I said. So what if the bounce comes and they don't break out and then they hiccup for whatever reason and then they try to recover and they can't do it? This will be a normal path. Nothing outrageous, just small head and shoulders that triggered. Now, having a head and shoulders doesn't mean you have to buy puts. It just shows you what the path may be after the bounce, if we bounce. And let's say the market doesn't bounce and we continue. Let's say the futures tomorrow are below 6809, 6808, the ES. We are, that's like 40 points lower than here, a little bit less, 38 points. So almost 4 SPY dollars. Let's say we wake up and we lost 4 SPY dollars. This one might start the path, the yellow path. And it wouldn't be end of the world. Look at how much downside there is down there. Look, I'm going to delete everything down here. Everything down here is ridiculous. Like when are we going to talk about these down here? Nowhere. Oh, and by the way, just so you know that I'm not one-sided about this. First of all, it's one of my favorite companies and my pick for winners. Look at this orange thing. You see how I said you have a zigzag, and if you break through here, you go up to the sky? And look at what they did. So when we look at paths, we see things that may look ridiculous at times. Let me zoom in and show you another look here. Okay, just ignore all the noise and focus on this little hump right here. How they broke out right here. How they tested footing right here and confirmed the breakout from this little hump. So now this little hump is about 295. Let's call it 300 to 295. 305 to 295. Where are we now? We are right there. So they broke out in November from this area, and they're approaching this area again. So good quarter, good numbers, and they freaked out probably on spending or something like that. So don't listen to what Wall Street says. I would sell a put spread with confidence. If markets hold up, this one will hold up too. Grab, G-R-A-B, grab. Nobody's grabbing grab. It's just heading straight down, lower lows and lower highs. It's not SAS. I know that for a fact. There's people that deliver stuff, right? This is like Uber or... All right, so here we have this moment of truth, this moment of truth. So breakout from here, confirmed support here, right? Those two yellow, we already have them, and it's falling into that. So anything inside of here is support. So you time your entry. Can you time a perfect entry? No. So somewhere inside this box. That's a lot for a $4 stock. But if you wanted to sell puts to own shares or buy shares, I wouldn't buy calls. The shares are $4. Buy shares. And then if you're right, and then it goes to 550, you made a huge percentage gain. So I wouldn't load up. I would take a quarter, maybe a third, maybe 40% of what I end up owning in the end, and then I would add more as it falls significantly lower. GitLab, GTLB, consolidation zone, solid support zone base, lost. When you lose the base, you overshoot. By how much? By as much as there's above it. Unfortunately, that means there could be way more downside. Now, luckily, if you look left back in May of 2023, May of 2023, there was a huge support zone. But man, that is old. Nobody's looking that far back. So you have multiple support zones that breached and the all-time low of May 2023. That is no bueno. GitLab. Is this GitHub or is that a different company? Is this like if I open an account on GitHub, it's them? Anyway, if it is, a competitor. Okay. So I like the service they provide, but I don't know how they make money. Like everything is free. I've deployed multiple websites using their services for free. I didn't pay a nickel. So I don't know what's going on. So maybe that's why it's being sold off. They have sales and they have profits. Maybe big companies pay them more. I don't know why it's selling off. So the chart is not really good indicator. So I'm intrigued. I want to do some homework. If anybody knows why I shouldn't touch this, let me know. You can see how target 1 and 2 on the downside were just nothing in the scheme of this. This correction is, let me see here. If we say, all right, we believe in Fibonacci. All right. Wow. So this looks 138 and 161.8. So this is a Fibonacci zone, and there's one below it. AI. I don't get it. People need more processing power with AI. AI is empowered on GitHub or in GitLab. Anyway, it is what it is. Speaking of another falling knife, machete, HIMS. Every time I said go long HIMS on the dip, I always give you the same caveat. What makes me nervous, I say this. What makes me nervous about this stock, which by the way, I sold one put a couple years ago at 23 when it fell out of the sky because it's being, quote, Amazoned. And I walked away because after that, I realized that, oh man, these guys are one headline away from being out of business. So business is great, but it's one headline away from being out of business from a competitor or pretty much knocked down to its knees, or worse, from regulatory pressures. And I think that was the headline that broke out. So a competitor who has better lobbying came to the officials and said, hey, there's cheating going on over there. And the officials sided with them, saying, you can't do generics online, whatever and whatever. So, boom. But it's also one headline away from rebounding 30-40%. I have no idea. Earnings in 7 days. You want to listen to what the CEO is saying. I also read something about the CEO, which I don't like. So you better do your homework. He was selling shares way at the top. And after this drop, his comments about the company, things are getting better. Why aren't you buying shares back? There's no way for you to tell people that the stock is going, the company is doing better by buying your own shares back. Strong CEOs will do it. They will do it in open market, but he doesn't believe it. So either he's not good at his job. Any good worth CEO would buy in the open market. That alone would make the stock spike. Anyway, he's not willing to do it for his people. I wouldn't give him my money. That's my take. But it does have earnings in 7 days, and that could bail you out. Bail you out. It might be cheap to buy puts just in case they say something nasty. Hood. All right. So this one also falling on pretty good report. They missed analyst expectations, but who cares if they, quote, missed? CEO talking points, record year, CFO talking points. Off to a strong start. We're on the street, drop in crypto revenue. Okay, so they had crypto revenue drop. Who cares? I sell tomatoes and I sell lemons. Okay, the tomatoes are out of favor right now, so I sell more lemons and make a record year. Does it matter if I sold more lemons than tomatoes? It doesn't, but that's how the market sees it. Robinhood is not about crypto, but it's tied to crypto, and that's why I don't like it. But look at this P&L. They are profitable. Look at this blue bar down here. This is a legit company. I would sell puts to own shares in this one. Like I said, we would sell a put spread to start, and if it continues to fall, then you would have the opportunity to say, give me my shares at 50 or 55, and I'll sell the owned put for a profit to lower my entry point. I would be comfortable doing this. Now this, you see that orange path? That's the same yellow path I drew on Alphabet earlier. That orange path. I said, what if they drop? And look at how well they did it, except they didn't bounce. They just lost the neckline and it went straight down, right? I drew it in yellow just right now, 20 minutes ago in front of you. That's the same path. I've seen it 1,000 times. When they trigger, that's the short of a headline that would flip it around. That's the path. Okay, so good long on Hood. I'm going to make it green here. What else did we say we would look into? DraftKings? Yeah, I can't remember now. Grab? GitLab. Yeah, I already have one. Okay, IBM. I can't stand this company. because it gets so much kudos and it's like the loser of all the companies. It's got so much potential that it left behind under Ginny Rometty, but they are turning the ship around, freaking finally. But not because of them, because of the wake they got stuck in. Did you know that this is the original freaking AI company from decades ago? I was a kid when I was hearing about AI from IBM. Oh, I can play chess and all of this. Nobody else was doing these headlines. These guys were so far ahead of their time and they did nothing. It's like Kodak. They invented the thing and they did nothing with it. It's like Xerox, you know. They had so much advantage and then they let it all go. And the only way I would go along this one here is with another credit put spread like this one. I'll put one here somewhere. So if we haven't done that yet, I should. I can't stand it, so it's never on the forefront of my. But it has a bounce, and it if the market holds up, this one has a good P&L. It should hold up too, and it has huge fans on Wall Street. They love this thing. Okay, so these yellow areas it needed to fill, so it filled this one. Okay, and so I'm gonna make it this way now. So now I know that there might be a reason to go here. And actually, it's half. The other half is up here. We'll do Bob Ross. I'm going to put a bird over here. And then another bird over there. And this one here would be a problem area. Anything above 293 should be very difficult. It's just resistance. I'm going to make it a R. So on the bounce, it's available, but there's going to be a lot of resistance. So if I buy a call, if I buy shares for a trade, not an investment, I would exit as I entered the middle yellow box. Credit put spread brings me cash. Debit call spread at the money or in the money is the way to trade this for me. I wouldn't want to trust just naked calls. The difference is if you take naked calls and you get the bounce, you can exit in minutes or hours. The other way, it takes a little bit. It's harder to scalp, okay? But it's less aggressive. So I don't have a specific trade, but we can structure one this week. I put it on my to-do list. I did, right? Yes. And I will put a marker on it. I'm not familiar what INDA is. Oh, it's an India ETF. Couldn't be easier than this. All right. So they're stuck inside of a very narrow zone, inside of a larger zone, inside of a very, very large zone. So you can see 48 and the top 59, but inside of it, you can say, okay, we can ping pong between 55 and 50. So 55 and 50, you're stuck. Whichever side you breach first, you're going to go in that direction. So if you lose 50 first, you're going to have a test against 47.5, and you're probably going to lose it. If you take out 55, 56, you're going to challenge the highs, and you have a chance at breaking out from it. So you're going to ping pong inside the narrow range and see if you can break out to a wider range. Intuit, software as a service. Everybody hates it. So I think also it had a headline just before that. We're so stupid. The headline is they're going to abolish the tax system in the U.S. You know how long legally that would take to actually put together? Anyway, so the stock fell off a cliff, and then software as a service. So this one is worth a long shot, but it has earnings in 10 days. So that's a pretty weird spike here in the quarterlies. What happened here? What happened in 2025? Pretty good, solid, but I wonder if that one spike, weird, they had a one-time fee or something, changes this to be lower. You know what I mean? Like there was no growth last year if it wasn't for that one-time spike, whatever that is. Just look into it. If this happens every third quarter, I mean, that may make sense actually. Anyway, I don't distrust this business. So if I was a fan of the company and I know it inside and out, this was an entry price, an entry opportunity. I'm pretty sure I sent out a credit put spread, although it might be buried by now. If you do have one in trouble, let me know, reach out. If not, I wouldn't mind a credit put spread, debit call spread. I wouldn't mind a call calendar, actually, just all out, like a couple $100 to risk on a snapback rally. And I would make it so I would buy, I would use the implied volatility that will exist in the week of the earnings. So buy something way out and sell the earnings week. Not a calendar, more like a diagonal. Anyway, pop into the live room. We can discuss it. And with that, the first video is over.